Recently, quite a number of my friends has been calling me, asking me if they have missed out on this commodity bull run. And I share a trick with them how I select the laggards. Laggards meaning the commodities are about to charge, but not quite yet. Now, how I do it is that I go to CME Group website and they have the largest collection of commodity futures. And just to help me to understand a little bit about where are each of the commodities doing, I study into almost every one of them. So I go to their markets tab, draw out their agriculture, energy, metals, and study into every individual contracts. My whole objective is that I list them onto my charting platform, multiple charts, and just to look at the price behavior and to understand who are the laggards. Now, I'm going to explain to you how it works. And I find that natural gas is just one of it. And I would really encourage you to go and study into it. I'm just going to give you one example how to do that. And you go ahead to explore the rest of the commodity market, the laggards commodity markets. So what we're going to discuss here today is three keys. Number one, we're going to talk about, I'm going to give you an example on natural gas, that it is breaking away from its range, how to identify the range. And number two, we're going to identify is natural gas at the beginning stage of a growth stage, or it is at a beginning stage of its major trend to come. And number three, we're going to identify and learn how to trade in this uptrend using multiple time frames method. Now, let's go to disclaimer first before key one. So what presented here is not a recommendation, so please consult your licensed broker. My mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty and the bolder risk when opportunity arises. Now, the first point is that how to recognize that the natural gas or the laggards commodities like natural gas has just broken away from its range that is entering into a growth stage. Now, let's look at this chart that we could see is more than about 10 years. And the natural gas currently is about closing, inching to about $9. But as you could see, compared to its history high, there's still a bit of room to go. So it's not exactly too pricey, but there's still some room to go. Now, I understand here is that it has broken its range market. Now, we could see a range here that over the past 10 years or more, it has been trapped in this range. But let me just introduce you to another box up method, which I prefer to use that than just draw a straight line or resistant line as such. Now, what I usually like to do to discover its range is that first I draw a box like this. Okay, it looks good. Then I make the adjustment on the bottom. I will try to find the best fit as usual. And on the top, I will find the best fit as well. And I like to shift down to about $5 about here. It looks great to me. And on my left, I will make some adjustment here as well. And on my right, I'll make some adjustment here. And it looks perfect to me right now. Why is it perfect? Because at the bottom of the range, it seems to be tested somewhere around here at 150, 156. And the top side of the range, you could see that since at about 2010 market, the range started somewhere around 2010. It was resisted at about $5, tested a few times. And then this was a false break, as you could see here, very nicely false break or false broken. So then after that, enter back to its range, bottom of the range, and it tipped very nicely at the top side of the range. Now, what we could see here is that at the cross of about 2001, towards the last quarter of 2001, the market convincingly broke above this $5 resistance. And we could see that. And this is what I classify as a value stage. Now, there's a few stages in the uptrend. I call it the range stage, followed by a value stage. And the uptrend market is what I call the growth stage, which is currently at the growth stage. But before a growth stage, there will be a value stage, a value proposition why the commodity is on the run. There's a reason because of the inflation that's happening, started the high inflation actually started in 2021, and that's what we see. It broke away from this range over the last 10 years. And you could see that in major commodities, they have such a trend. 3 stages from range stage to value, and now it's heading, and many of them are heading towards the growth stage right now. Now, what during the value stage is a break away from the range, but there's also a retracement that we could see it very nicely, and now it's moving to a growth stage. And that's kind of covered my part one, where we talk about the example of natural gas that break away from its range. And I kind of also discover about the part two as well. And we could see that it is even right now, it is just at the beginning of its growth stage. So that's the reason I use the monthly chart, because it will give us a very holistic picture of where we are right now. And it seems to me that the natural gas is still moving up, and there's still more runway for it to hit the various target, maybe at 13, 14, or $16 if inflation is very persistent. Now, so we have an idea about where is the major trend heading. So what I'm seeing here is on its uptrend and the beginning of its uptrend or growth. Now we're going to go to the third key for today's discussion, which is how to identify and trade in this uptrend using multiple time frames. And then I'm going to move into the daily chart. That's where we're able to see the final print of this growth stage or the uptrend. Now we could see that in the previous videos, I explained how to identify or what are the characteristics of an uptrend. Basically, an uptrend is this. The current high, it is higher than its former high. And the existing low, it is higher than the former lows. That's what we discover. And we could see that in this uptrend, it's so classic here that each high, it was higher than its previous high. We could see that. So it's a very classic uptrend. Don't have to be dispute that is it a range or uptrend. It is an uptrend. And the low itself, all these lows compared to its previous lows, it was also higher than the previous low. Now, so in an uptrend, how to enter in a market is this. Also very straightforward, very simple. Is that on an uptrend, there's no rush into buying into anything, but we wait for a retracement like this. And we look out for a biting point. A biting point, it could be a hammer, it could be a bullish engulfing body, or any other formation that you have known. Now, I call it just a biting point to make it as an easier illustration. Now, this is a retracement, and this is what I call biting point. And the reason biting point was here, it peaked at this price. And this is what I call retracement. And we have a very classic hammer here. This is what I call the biting point that was 3 days ago, which I believe that the low should not be broken anytime soon. So this will be a good proposition for a buy entry at this point in time. For those who like to exercise a stop loss strategy, this low, it will be a good stop loss strategy. And I'm seeing market to continue to trend up from here. Now let us go back to the holistic picture on the monthly chart. So as we go back to the monthly chart, what we have discovered early on the daily chart will make a lot of sense. So feel free to leave any comments below. I love to exchange great ideas with you. Continue to explore this topic with these related videos and register for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel and remember to turn on the notification bell. See you again very, very, very soon.